Hi, this is Bruce Kowal. I'm here to talk to you about a very unpleasant topic, which is the pig butchering losses, which some of you may have experienced in 2023. In fact, if you're here listening to me, you probably did a search on the internet, and that's how you found me. So we're going to go over a strategy, tactics, and an overview. So again, if you found me, then you're aware of the topic. It's probably the most cunning use of the internet and the age-old confidence scam. It's worth $70 billion. That's according to a study at the University of Texas in Austin. Here's a link to it here. You're not going to recover any of your money. And the best you can do right now is maybe mitigate some of the loss by lowering your taxable income. And do you really think the IRS is going to allow these losses without putting up a fight? So this is kind of an overview of what you might need to do. This little chart here probably mirrors very, very painfully what you've experienced through all of this. So, how it starts. Not sure if you can read this, but basically the type of thing that you might get saying, hey, my name is so-and-so. I can make you a lot of money. Are you interested? So we're going to go through an overall strategy and then the tactics to get there. The strategy is, and I'll explain it later, is basically to file, claim the losses, and then wait and see if the IRS asks you questions about it. So we're going to wait for IRS guidance. So let's look at what the IRS did in response to the Madoff fraud. That fraud was unveiled in October 2008. And he was arrested and charged December 1st. And in March 2009, the IRS already put out a revenue ruling and a revenue procedure. Well, by contrast, this pig butchering scam has been known for a long time. The IRS has publicized it, and there is no guidance, and it's already March. So the fact is, you might not get any particular guidance. The question is, why did they get such quick guidance? Well, the victims are very wealthy people. They said, I lost $1 billion, and they called their senators and congressmen, and by golly, they got that guidance pretty quick. But you're small guys, and you may not get that type of scrutiny from the IRS. They may not issue guidance, so you'll have to rely upon prior law regarding what is a theft loss. So, what kind of guidance are we talking about? The question is what you have, is it a loss? And if so, is it a deduction? And it doesn't fit the Madoff guidance. Basically, here's what we want. You want the ability to offset your current income with losses realized from the theft, right? You want you want something. Well, here's an example. So let's say you have W-2 income, $100,000, IRS withheld $20,000, and you got suckered with a pig butchering scam of $500,000. So what do you want? Well, you want your taxable income reduced to zero. You want that $500,000 to bring that $100,000 down to zero, and you want those taxes withheld refunded, the $20,000. Note, you're only going to get the taxes you paid. They're not handing out credits like the earned income credit or something. So then the question is this a loss which can be deducted in full without any limitations for AGI or itemized deductions? And we call this a Section 165H deduction, and we look to a revenue ruling 72112. This is kind of wonky stuff, but I just want to make you aware of it. So the thing is, it's not a Ponzi scheme, so the relief that the IRS gave back in 2009 doesn't apply to this. And this is the fly in the ointment, because the relief provided earlier, they need to know the name of the schemer. You have to put down like Bernie Madoff or Alan Sanford or someone else. You need their name to get the automatic relief. In other words, this particular revenue procedure said, if you give the name of the guy and fill out a couple of lines here, we won't even question the loss. You just take it automatically. Not the way it is here. So he provided a no questions asked, allowable deduction, file the forms, issue a statement, and that's it. But there is nothing about these pig butchering scams right now. So what are the issues? Let's go into the tall grass here. So these losses from pig butchering, are they treated as investment losses? giving rise to capital loss limitations. In case you don't know already, that's $3,000 a year if you're married. You will never live that long. Or are they theft losses, and they're deducted without any limitation under casualty loss rules? That's the big question. Now, state law controls the definition of theft. This is very important. What are the elements that are required to show fraud? That's another question. The U.S. tax code has denied deductions for theft loss based upon not following the state statute definitions of theft. So you have to know wherever you live, you can get in touch with your lawyer. And there's got to be a direct connection between the perpetrator and the victim. You know, some in the Madoff thing, people invested money in a fund, and then the fund invested money in Madoff, or he went to a broker. So they went through different parties, and in some cases, the IRS, they denied the deduction because you didn't do it directly. Obviously, in this case, with these pig butchering scams, you're dealing directly. You know, and the question is, internet-based fraud. There is no third party. Who are you dealing with? You don't even know. Usually it's a Chinese woman somewhere. You don't know where the hell she is. She's on WhatsApp, and you can never get her. There's no pictures. There's no nothing. So in these pig butchering cases, and there's no reasonable prospect of recovery. The revenue ruling dealing with Madoff, it talks about a couple of things here, which you should be aware of. One, you want a theft loss rather than a capital loss. And you want an itemized deduction that's not subject to personal loss limitations. And the loss must be claimed in the year it's discovered, and there's no claim for reimbursement. Okay, so what's the three-step plan? Number one, what I recommend, recognize the loss as a casualty loss in 2023. Apply to offset your 2023 income. Get a refund of the money that was paid through withholding or estimated taxes. And if we cashed out an IRA and you're under 59.5, there's a 10% penalty on early withdrawal. We'll seek to have that penalty abated. That's a separate issue. You request that. Now, the losses generated, if they're not absorbed, they can be carried forward up to 20 years, but only 80% of those losses. Why not 100%? Life is unfair. These are called net operating loss carryforwards. I'm abbreviating a lot of the technical stuff here just to give you an idea. So what we want to do is we want to recognize the loss. If we had a penalty, we want to request an abatement of the penalty based upon hardship. And once you have the losses, you carry them forward. That's the plan. In other words, file, get the refund. Now, the aftermath. So the IRS will pretty much process the return and issue a refund. This is automatic in a lot of cases. Large refunds may require high levels of approval, and they can write you by mail and request additional information. But let's say you get the refund. The IRS has 3 years to audit your returns. 3 years from date of filing. And then you'll probably be audited on this if these numbers are large enough. So what do you do now? If the IRS does not audit the return, you are home free in 3 years from the date of filing. That's called the audit lottery. You take a position on a tax return, and if you don't get audited in 3 years, you're home. Here we're taking reasonable positions. We're not trying to cheat anything. But if the IRS examines your return, at that time you need to defend the deduction. Not now. Right now is a matter of building awareness, saving your documents, keeping in mind what might need to be done. So you provide evidence of the loss and honest reliance upon the regs, court cases, and the code. And if the IRS disallows your theft deduction, you will have to repay your refund with interest. And if you request an abatement of early withdrawal penalty, they'll either approve or disapprove. So, what are the best practices for dealing with all this uncertainty? All right, so during the time we're waiting, if the return can be audited, the IRS, they may issue guidance on the proper treatment of these losses, which would be good. You notice the IRS, they issued their guidance in March of 2009 so people could take advantage of it in preparing their 2008 tax returns before the deadline. That hasn't happened. Maybe it'll happen next week. I don't know. So during the time you're waiting, they may issue guidance, and it may turn out that what you did will be allowed. Or the tax court might give a decision on a similar fact pattern. What we want is the IRS, this is nerd speak here, this is how they talk. We want the IRS to administratively provide a beneficial tax treatment for theft losses from pig butchering schemes if certain conditions are met. That's what we would like. Otherwise, you might want to do this. We call this a deposit of a tax. What does that mean? You take your refund, then you give it to the IRS as a deposit in case you lose the audit. And this is under the Revenue Code 6603, Rev Proc 2002-18. Why would you want to do this? Why would you want to take your refund and sock it away? Because it'll stop interest and penalties from accruing in case you lose. Does that make sense? You will take your refund if you don't need it desperately. You'll file the return, claim the loss, take your refund, and then give it to the IRS as a deposit in case you lose your audit. In which case you pay over the money and there's no accruing interest and deposit, because it could be 18 months, 24 months before you resolve all of this. That's best practice. Okay, that gives you a choice. You know, that's in our toolkit as tax professionals. And so just to resume, what's the authority for all this stuff? You have the Internal Revenue Code, regulations, procedures, rulings, and tax court opinions. And that's that. What's next? You have any questions? Reach out to me. I'm not going to go into the tall grass and, give you, file this form and fill out this line and give you screenshots of IRS stuff like that. Basically, I'll just help you with what we've discussed here. If you want me to help you specifically in preparing your tax return or filing an extension, feel free to give me a call, Bruce Kowal at cpa.com or 617-704-1194. I feel very sorry for your loss. I have clients who lost money on this thing. It was the nastiest thing I've ever seen in my life. I hope all these people burn in hell for what they did to innocent people. That's it.